All right, everyone, settle in. Welcome. Today, we're diving into something that's both fascinating and, frankly, a bit terrifying. We're going to talk about the intersection of biology and finance. Yep, you heard that right. We're going to peek inside the trader's brain to see what really makes global markets tick.
So let me just throw this out there right at the beginning, a question to get you thinking. We're all worried about the next big market crash, right? We blame complex algorithms, geopolitical chaos, but what if the biggest threat, the real danger, isn't out there at all? What if it's in here? What if the problem is us, our own biology?
You've all seen the stories, I'm sure. These spectacular blow-ups, these rogue traders who single-handedly sink massive financial institutions. For years, we've chalked it up to greed or a bad apple. But what these stories really point to is something much more fundamental. Something we've ignored for far too long, the human factor. And that is exactly what we're dissecting today.
Okay, so if we're going to understand this human factor, your standard economic charts and models, well, they just don't cut it. They can't explain the chaos. To get to the bottom of this, we have to go deeper. We literally have to look inside the brain. And this need has sparked a whole new field of science, one that puts the trader's mind under the microscope, especially when things get intense.
And that field? It's called neuroeconomics. It's a bit of a mouthful, I know, but the idea is actually pretty simple. It's the science that asks, how do all those hidden, unconscious things happening in our brains, our biology, our psychology, how do they end up influencing massive economic decisions? Think of it as the missing link, the bridge connecting the brain to the bank account.
So when scientists in this field get a trader in the lab, what are they really looking for? Well, they're chasing some pretty huge questions, like what is actually driving these people? What stimulates them? What motivates them to take these incredible risks? And maybe even more importantly, how on earth does a human brain handle that kind of constant extreme stress? You know, the kind of pressure cooker environment they live in, day out. And the big one, how does all that intensity fundamentally change their behavior, maybe in ways they don't even see themselves?
And what they're finding, oh boy, the evidence coming out of neuroeconomics is, and I'm not exaggerating here, it's completely revolutionary. It takes the old textbook idea of the rational economic man, the person who always makes logical, calculated decisions, and it just blows it to pieces.
I want you to really listen to this next part because it's the core finding. The research shows, and this is a direct quote, that traders are being governed by unconscious psychological and biological processes which can trigger borderline behaviors. Let's pull that apart. Governed and unconscious. That's huge. This isn't about someone making a bad choice. This is about being driven by forces they aren't even aware of.
So this just throws the old model right out the window. For so long, the myth was the rational trader, this almost robotic figure, always calm, always making the perfect calculated move. It's a nice idea, right? But the reality that neuroeconomics is showing us is the biological trader. This is a real human being running on ancient, deep-seated survival instincts and stress responses. We're not talking about a supercomputer here. We're talking about a primate in a suit.
Okay, so let's put the pieces together. You've got an individual trader sitting at a desk under unbelievable pressure. Their brain is being hijacked by these unconscious biological forces. So what happens next? What happens when you take that one person and multiply it across an entire trading floor, an entire market? Well, this is where it gets really scary. This is how a chemical reaction inside one person's head can actually trigger a global financial meltdown.
It really is like a chain reaction, a set of dominoes just waiting to be tipped over. First, you start with the environment itself, the relentless stress, the cutthroat competition. That's domino one. That pressure knocks over the second domino. The unconscious, biological parts of the brain take the steering wheel, shoving the rational, logical parts into the back seat. Then comes the third domino. These primal instincts trigger what researchers call borderline behaviors. We're talking about wild risk-taking, following the herd off a cliff, outright panic. And you know what the last domino is, right? Catastrophe. Disastrous financial consequences, not just for them, but for all of us. And this is the thing you absolutely have to understand. This is why all of this matters so much. A stress response happening inside one trader's brain is not some isolated, personal problem. No way. It's like a pebble dropped in a pond, but the pond is the global economy. Those ripples can become a tidal wave. One person's adrenaline surge can literally become a global financial crisis.
Okay, let's bring this all home. If I were to put one question on the final exam about today's lecture, this would be it. This is the single most important idea I want you to walk away with.
That human factor we talked about,
It is not, and I repeat, not a personality flaw. It's not about someone being weak or greedy. It is a fundamental, deep-seated biological reality. It's hardware, not software. So if you want to understand why markets go haywire, you can't just look at the numbers. You have to understand human biology. They're two sides of the same coin.
Which, of course, leaves us with a pretty big and, honestly, a pretty unsettling question. If our entire global financial system is built on the decisions of human beings, and if those human beings are all hardwired with these ancient, powerful, and often irrational responses to stress, can we ever really make the system safe? Can you truly stress-proof a market run by animals? Something to chew on. That's all for today.